Hi, this is Cameron with Movement Mortgage. I've got Lindsay Clark here with the L. Clark Group at RE/MAX Professionals. Just wanted to get kind of an expert's opinion on what's happening in the real estate market out in Reno, Nevada. So Lindsay, can you tell us a little bit about what's going on?
Yeah, sure, Cameron. Thanks for having me.
Yeah, of course.
So as we all know, the market here in Reno for the last 2 years has been hot, has been amazing. Sellers have been listing and selling as quickly as they can. So what happened is Easter weekend hit this year and we saw rates go way high. We saw the stock market do some things that kind of brought a chill to our market. So our market has kind of cooled in the last month and a half. Sellers are starting to see their homes not get as much activity. We are seeing our inventory tick up a little bit here in the Reno-Sparks area. What's nice about that is buyers are starting to get a little worried about the rates and the cost to live here in the Reno area because our prices inflated a little bit when the market was hot. Yeah, absolutely. And then when the rates went up, it started to make the affordability of the homes a little bit more difficult for buyers. It also brought the fact that they were going to need a little bit more cash to bring to the table to keep into that conforming limit, which is
$647,200.
There you go. So, you know, with our average price point in the Reno area, anything over 700, buyers were looking at having to need 50 to 100K plus just to buy a home. And as we know, in the last 2 years, 5-10% was a real popular thing for them to jump on. So we are starting to see buyers getting a little bit more excited. I really want to put that out there that now they have more inventory. Now they have more chances. We are starting to see our locals getting a little bit more of a chance because we're starting to be able to write contingent offers again. We also are getting some contribution back from the sellers to help buy that rate down a little bit to make their home, their monthly mortgage payment a little bit more affordable.
Absolutely.
So what I really just want to stress to buyers is it's not that scary out there. Let's do this. We've got ways, we've got plans. And like I said, we get to negotiate again. It's so much fun.
Well, and when it comes to the interest rates as well, everybody got so used to those 2 and 3 and 4% interest rates, which were artificially low historically. I mean, yeah, for the last 10 years, they've been in that lowest point. But if you take a look historically over the last 30 to 40 years, interest rates tend to kind of hover around that 6-7% range. So we're still pretty low compared to what's happened in the past. So what we've kind of seen over the last few weeks is we did see those interest rates start like rising like crazy, but they've kind of done a level off, which we expected them to do. We didn't expect them to just continually increase every single day for the rest of the year. So we've kind of seen them level off kind of in that mid 5% range, which still leaves us with a pretty healthy interest rate market. Yeah, it's hitting some affordability factors. I think the market is just kind of at this standstill, let's say that. Sellers are figuring out what to do, buyers are figuring out what the heck just happened. So it's just gonna take probably a few weeks for the market to settle back down a little bit, get everybody out in the market again.
I agree.
They gotta get used to these interest rates that are a little bit higher. And historically, they're still very low. So don't necessarily get discouraged by it. It's actually kind of opening up a lot of opportunity, as Lindsay was saying.
Yeah.
You're not having to go to that first house and make an offer on it in 20 minutes of seeing it. You've got a little bit of time to sit on it. You have more options available out in the market.
Well, and I like to stress too is always go to your professionals because there are options. I know that y'all are sitting at home and you're looking at the market and you're looking at your money and you're thinking, we can't afford that. Yes, you can. We can help make that happen, especially now that we can negotiate again. And always remember that if you decide not to buy because the rate's too high and you want to rent is 100% interest.
Absolutely.
So, I mean, you're not putting towards your investment at all.
Well, and rental prices are severely inflated as well.
Absolutely.
There might even be more than that
Reno,
mortgage.
For sure, absolutely. So Cameron, just real quick, we have been hearing that the jumbo rates have actually gone below the conforming conventional rates lately. Is there any way that you can tap on what the jumbo rates are doing right now due to the fact that we've got some luxury properties that are on the market that just kind of stagnant on activity? And I think it's because buyers are thinking they've got to have that 20% down to do that jumbo.
Absolutely.
So can you kind of touch on what you've got for jumbo products?
Yeah, so in the jumbo product realm, we have a ton of options. Whereas you go into the conventional world, you kind of have your Fannie Mae typical loan or your Freddie Mac typical loan out there or your FHA or VA. You don't really have too much competition out in that market. Whereas on the jumbo side, that's the bank actually holding that loan. It's not backed by any government insuring agency. So these banks that we go through to get these jumbo loans, we probably have 8 or 9 of them that we go through. They're all competing against each other to get us the best rates out in the market. So with that competition, it helps bring the rates down because they're able to offer it to us because they want that business. So typically you're going to see conventional conforming rates in that mid 5% range. The jumbo market, you're going to see probably high 4s to low 5s at this time. Not saying that's going to hold the whole time, but that's historically what we've seen. Those jumbos tend to be a little bit lower than the conforming rates out there. Jumbo loans also have different options. They do have 10% down options out there. The interest rate probably going to be a little bit higher on that because you have no mortgage insurance. You typically want that 20% down, but there are options out there for those 10% down home buyers.
Well, and that's why you get a real estate agent to negotiate some of those closing costs on those luxury properties to help get that rate down a little bit.
Absolutely.
And or help with that down payment.
It's an awesome option, and the market right now is allowing for that kind of stuff, so definitely take advantage of that.
Awesome, Cameron.
Yeah,
Thank
so
you.
if they wanted to get a hold of you
Yeah.
to come see any luxury properties, how would they get a hold of you?
So you can hit up all of our social media. We have Facebook, Instagram, LinkedIn, as well as YouTube. You can go to our website at www.lclarkgroup.com. We are also RE/MAX collection agents, so we're also on that website. And then you can always just give me a call at 775-846-5189.
Awesome. Thanks, Lindsay.
Thanks, Cameron.